Hello there! Welcome to another cracking adventure, Gromit. Today we're not tinkering with cheese gadgets or chasing after runaway trousers. Instead, we're setting off to explore something that's just as exciting and, dare I say, a bit mysterious: the USA stock market. Now you might be wondering, what on earth is the stock market? Well, let's break it down together. The stock market is a place where people buy and sell little pieces of companies called stocks or shares. It's not just for fancy bankers in suits. Anyone can join in, even you and me. Imagine a massive fairground, bustling with excitement. But instead of trading veggies or winning goldfish, people are swapping tiny slices of famous companies like Apple, Disney, or even a cheese factory or two. Each booth represents a different company, and the tickets you buy are your shares. When you buy a stock, it's like owning a crumb of a giant company cracker. The more crumbs you collect, the bigger your share of the cracker. And if the company does well, your crumb becomes more valuable, almost as if it's been sprinkled with extra cheese. But beware, Gromit, the value of your crumb can go up and down. If the company's doing brilliantly, your crumb grows and you might feel like the king of the fair. But if things go wrong, your crumb could shrink, and that's a real bother, like dropping your last bit of Wensleydale. The stock market has special places where all this trading happens. The New York Stock Exchange is like the grandest tent at the fair, filled with big, old companies. Then there's the NASDAQ, a flashier tent where all the techie, futuristic companies gather. Think robots, computers, and clever gadgets. Every single day, billions of dollars change hands as people try to guess which companies will soar and which might stumble. Some folks buy and sell quickly, hoping to make a fast profit, while others hold on to their shares for years, dreaming of a big reward down the line. So, next time you hear someone mention the stock market, just picture a lively, colorful fairground where fortunes can rise and fall faster than a cheese soufflé in the oven. It's a place full of excitement, surprises, and maybe, just maybe, a bit of luck. Let's dive into the world of the market's biggest movers, the stocks that don't just inch forward, but instead shoot up like rockets, capturing everyone's attention. These are the companies that suddenly become the talk of the town, with their prices soaring sky high in what feels like the blink of an eye. It's as if they've strapped on boosters and left the rest of the market behind, racing toward new heights. But not every story is about a rocket launch. Some stocks float down gently, like parachutes drifting through the air. Their descent might be calm and controlled. Or sometimes, it's a slow realization that things aren't going as planned. These gentle landings can be just as important to watch as the dramatic takeoffs. Most stocks, though, simply shuffle along day after day, making small moves that barely register. But every so often, a few leap upward or tumble downward in a way that makes everyone stop and stare. These sudden jumps or drops can happen in a single trading session, turning an ordinary day into a memorable one for investors. So what causes these wild swings? Usually it's big news, like a company unveiling a groundbreaking invention, reporting a surprise profit, or facing an unexpected problem. Sometimes it's a new partnership, a change in leadership, or even a rumor that spreads like wildfire. The market reacts quickly, and prices can change in a flash. When the news is good, excitement builds, and a stock can soar, leaving investors celebrating and eager for more. It's a moment of triumph, with confetti flying and cheers all around. But when the news is bad, the mood shifts. A stock can plummet, sometimes faster than anyone expects, leaving investors worried or scrambling to make sense of what happened. These dramatic moves grab headlines and shine a spotlight on which industries are heating up and which ones might be in trouble. It's a way for everyone to see where the action is and where caution might be needed. Watching these big movers is like catching the main event at a fair. There's energy, suspense, and a sense that anything could happen. The crowd gathers, eyes wide, waiting to see which stock will take off or come back down to earth. These moments reveal the market's mood. Sometimes it's full of optimism and hope, other times it's clouded by worry or wild speculation. The emotions of investors are on full display, shaping the story of the day. By understanding these big moves, we can start to read the weather of the business world, spotting sunny days of growth, cloudy periods of uncertainty, and even the occasional storm. It's all part of the fascinating drama that makes the stock market so exciting to watch. Now let's meet today's high flyers. Solar Sprint Energy stock soared 18% after inventing a cheaper all-weather solar panel and getting a government boost. Investors rushed in, hoping for sunny profits. Dreamweaver Studios also jumped 12%, thanks to a blockbuster film smashing box office records. When companies surprise with big wins, their stocks rocket up, and investors celebrate. It's like finding an unexpected block of cheese. Everyone who owned these stocks yesterday feels clever today. A grand day for the optimists. But it's not all sunshine. Some stocks have tumbled. Global Motors dropped 15% after recalling thousands of cars for engine problems, costly and worrying for investors. Quick-Burger fell 10% after reporting higher costs and lower profits. Not enough burgers sold to cover pricier beef and potatoes. Bad news makes investors nervous, so they sell, pushing prices down further. It's like watching your favorite cracker crumble before you can add cheese. For those holding these stocks, it's a day for long faces and maybe a quiet cup of tea. The market giveth, and the market taketh away. That's the risk of the fair. Stock swings make emotions run wild. When your stock soars, you feel brilliant, maybe even a bit smug. That's FOMO, fear of missing out. People rush to buy, hoping not to miss the next big thing, which can push prices even higher. But when your stock tumbles, panic sets in. You want to sell before it drops more. Classic fear. Greed and fear drive the market's wild ups and downs, often more than logic or spreadsheets. People follow the crowd, whether chasing gains or fleeing losses. It's like everyone suddenly wanting the same cheese. Soon there's none left. Understanding these feelings is as important as reading a company's report card. You'll hear talk of bulls and bears in the market. A bull market means prices are rising, optimism is high, and everyone's buying, like a sunny village fete. A bear market is the opposite. Prices fall, pessimism spreads, and people sell, like a picnic rained out. Bulls see opportunity, bears see risk. The market is always a tug-of-war between these two moods. On any day, bulls and bears battle it out, and the winner sets the tone. Whether it's a bull run or a bear slump, it's all part of the market's grand kerfuffle. The trick is knowing which animal is leading the dance. So, why watch the big movers? What's the point of keeping an eye on those stocks that seem to leap and dive every day? Well, let's break it down. It's a bit like checking the weather before heading out. You wouldn't leave home without knowing if you'll need an umbrella or sunglasses, right? In the same way, watching the market's biggest movers helps us prepare for what's ahead, whether it's sunshine or a storm. Soaring or sinking stocks show us what's working in business, and what's not. When a company's shares shoot up, it might mean they've launched a brilliant new product or reported record profits. When they tumble, it could signal trouble, like missed earnings or a big scandal. Investors use these clues to make smarter decisions, spotting opportunities and avoiding trouble. It's a bit like being a detective, piecing together hints from the market to figure out where things are headed next. By watching the movers, you can learn which industries are heating up and which might be cooling off. Even if you never buy a stock, the market's ups and downs reflect the health of the whole economy. When lots of stocks are rising, it often means businesses are growing, people are spending, and confidence is high. If the market's falling, it can be a warning sign that things are slowing down. When stocks rise, jobs and wages often follow. Companies may hire more workers, pay better salaries, and invest in new ideas. It's a ripple effect that can touch everyone, not just investors. But when stocks fall, it can signal tougher times ahead. Companies might cut back, jobs can be lost, and people may start to worry about the future. That's why these market moves matter to all of us. The stock market is a daily drama of human hopes, fears, and clever ideas. Every day, millions of people make decisions that shape the story, sometimes with wild plot twists. Watching the big movers gives us a front-row seat to this ever-changing story. It's like being in the audience of a play where the script is written in real time, and anyone can join in. So whether you're an investor or just curious, keeping an eye on the market's movers helps you understand the world a little better. Now, after all this excitement, I think it's time for a cracker grommet.